Hello, I'm recording a quick video because the original creating the chart template video I recorded was using ProRealTime version 10.1. There's now a version 10.2, so some of the ways that you set up the charts might be different. Now, I've just looked into it, and the vast majority of the steps that I take in the original creating the chart template video are exactly the same using ProRealTime version 10.2. Where there might be a little bit of confusion is when we begin to add the average true range indicator pane to our charts. So in this video, I'm going to explain in a bit more detail than I did in the original video what the average true range indicator pane is there for and how to set it up. So firstly, the reason that I add an average true range indicator to the charts is because I want to calculate the value of ATR multiplied by a certain factor without having to come to, have a look at a calculator or to work it out in my head. So let's say, for example, we want to buy Apple today, and let's say we're using the breakout strategy from the book. So let's say that we want to trail a stop loss, and the stop loss value is going to be the value of ATR multiplied by 7. Now, we might want to multiply it by 5, you might want to multiply it by 6. It really is up to you how wide or how tight you put your stop losses. You can use ATR times a number of different factors, and this is something that you will definitely want to test for yourselves. But anywhere between ATR times 5 and ATR times about 8, all of those different values work absolutely fine. The difference is if you use a slightly tighter stop loss, so let's say you use ATR times 5, you'll be able to buy more shares. So if the stock keeps rising, that's great because you have a larger position. But if the stock corrects, you're more likely to get stopped out of your position than if you were using ATR times 7. The problem if you're using ATR 7 is obviously that you've bought less shares. So as with all trading systems, there are advantages and disadvantages to the parameters which you use. But for the sake of simplicity, I'm going to set up the chart templates here, and I'm going to use the ATR value multiplied by 7. So we're going to use that for our breakout strategy. And what I'm also going to put in the ATR pane is the value of ATR times 2.25, because that's where we put our stop loss when we trade the counter trend strategy. And I'm also going to have the value of ATR times 3.5, because that will tell us where to put our profit targets when using the counter trend strategy. So to add the indicator pane, first of all, you want to come to the Add Indicator button here. Scroll down to Average True Range, which is here. Click Add. So what we're looking at here is if we change the number of years to 20, we are looking at the 20 period average true range of this particular stock. So this is actually a chart of Apple. So the average true range of Apple is $2, and if we round up, $2.45. So we can make this a little bit neater by clicking in the color zone and unchecking this box here. So we've got rid of that highlighted area. So as I mentioned, let's say that we want to buy Apple today. Just pretend that Apple met all of the breakout rules. We're going to buy it, and we're going to trail our stop loss 7 times the value of ATR below each new high. And we are also, because we're using 7 times ATR, we want to calculate how many shares we're allowed to buy using ATR times 7 as a stop loss. So if we were just looking at a chart like this and all we had was the value of ATR, and let's say we want to risk $500 on the trade, so we would have to open a calculator, The first thing we want to do is find out the value of ATR times 7. So we would have to put in $2.45 multiplied by 7. So that would be $17.15. So we know that our stop loss would be $17.15 below our entry price, and that would trail behind each subsequent new high after we bought the stock. If we're risking $500, we would go $500 divided by $17.25, which is what we just calculated as our stop loss. So we know we could buy 28 shares of Apple. Now all that's taken a little bit of time because we've had to calculate what ATR times 7 actually is. To save us the hassle, we can add envelopes to the average true range indicator pane. So the first envelope we're going to add is going to tell us the value of ATR times 7, and that's just going to save us from having to open our calculator and doing the calculation manually. To add the envelope, come to the little spanner in the average true range indicator pane, and then click Add Indicator, then click on Envelopes. The first thing you'll want to do in the settings is change the number of periods to 1, and then you'll want to vertically shift by 600. The next thing you'll want to do is click on the little envelope minus here, and then you'll want to make that invisible. So click on the style drop down, click invisible, and the next step in the color zone is to click on the envelope plus line here and uncheck that box. And now you can see we have the value of average true range, but we also have the value of average true range multiplied by 7. You can very quickly now identify the breakout signals and then just very quickly determine how far away your trailing stop loss needs to be. In this case, using 7 times ATR, it would be $17.12 below the entry price, and it would trail by the same value behind each new subsequent high. For the counter trend strategy, we know that our stop loss is 2.25 times ATR beneath the entry price, and we know that our profit target is 3.5 times ATR above the entry price. And again, we can work out those values very quickly by adding some more envelopes to the ATR indicator pane. So again, click on the spanner, add indicator, envelope, again, number of periods is 1, and this is going to be the stop loss for the counter trend strategy. So the stop loss is 2.25 times ATR beneath our entry price. So we need to work out what 2.25 times ATR is, and we can work that out by vertically shifting the ATR by 125%. Again, we'll make the minus envelope invisible, so click the envelope minus, style, invisible. Again, we'll get rid of the highlighted area by coming down to color zone, in the envelope 125, uncheck the highlighted box, and then we'll make all these ATR multiplied by whichever factor it is, we'll make them all different colors. So come to the envelope plus, and we'll make this one, let's go blue. So now looking at the indicator pane, we have the value of average true range, we have the value of average true range times 2.25, and we have the value of average true range times 7. Now the last one that we could add, as I mentioned, was the value of average true range times 3.5, which will tell us how many points away our profit target will be when trading the counter trend strategy. So again, click Add Indicator, envelopes, number of periods 1. To tell us the value of ATR times 3.5, we'll want to vertically shift it by 250%. Again, we will make the minus envelope invisible. So click envelope minus here, come into style drop-down box, click invisible. And again, we'll get rid of this highlighted area. So come to the envelope plus 250 line, uncheck the highlighted box, and finally we'll make this particular line a different color again. So in the envelope 250 line here, click envelope plus, and we'll make this one like a dark green. Click OK. So now we have the value of ATR, which is the black line. We have the value of ATR times 2.25, which is the blue line. We have the value of ATR times 3.5, which is the green line. And we have the value of ATR times 7, which is the red line. And the advantage of this, as I've mentioned, is simply that when we are looking at our charts and we know we're going to make a trade, we can very quickly look into our average true range indicator pane and identify, in the case of the counter trend strategy, how far below our entry price our stop loss will be. So in this scenario here, it would be $5.50 below our entry price, and the profit target would be $8.56 above our entry price. If we were trading the breakout strategy, then we would trail our stop loss by $17 beneath the entry price. Now, depending on what your tests indicate, you may find that you would prefer, when trading the breakout strategy, to use ATR times 5 or 4 perhaps, or 5.5 or 4.5, whatever it may be. These are the things that you would test for yourselves. So let's say that you were going to use ATR times 5 for the majority of your breakout trades. Just come to the little spanner, and in the envelope 600, which at the moment is telling us ATR times 7, we could shift that by 400 instead, and that is now telling you the value of ATR times 5, and so on and so forth. So once you've tested your strategy and you've decided on which multiplier you're going to use for your breakout trades, which, as I keep saying, it could be anywhere from ATR times 4, times 4.5, times 5, times 5.5. Lots of different values are all profitable. The difference is that the tighter your stop loss is, the fewer winning trades you'll have, but the winning trades that you do have, you will actually make more money because your position size will be bigger. If your stop loss is wider, you will have a greater number of winning trades because you're less likely to get stopped out of a position in just a correction, but your position size will be smaller, so you will earn less of a return for each dollar risked when using a wider stop loss. Again, I hate to keep saying the same thing over and over, but these are the things that you should really be testing for yourselves and determining what type of system it is that you want to trade. But apart from that, I hope that illustrates what these ATR lines are actually for. As I said at the beginning of the video, you don't actually need to do this at all. You could completely get rid of them, and you could just simply use a calculator every time you know you're going to make a trade. But if you don't want to do that, this is a nice and quick method of determining the value of ATR multiplied by X. So I hope that that helps. If it doesn't, please leave a comment or email me and I will explain further. Otherwise, there's one other thing that I want to add to the membership area after I've recorded this video. It occurred to me that I didn't illustrate how you can scan for signals using ProRealTime. And this might be very helpful for people who are perhaps not so used to writing code and things like that. So in the next video, what I'll do is I will show you how you can scan for daily breakout signals just by clicking a couple of buttons. Each day you will know all of the stocks on a particular index which have met each of the technical rules from the daily breakout strategy in the book. So watch the next video if you would like to know how to do that. Take care.